Good afternoon, and welcome to the 800 Credit Score Man Show. I am your host, Kevin King. He is I, and I am him, the 800 Credit Score Man himself. And I want to thank each and every one of you for tuning in to the 800 Credit Score Man Show every Saturday, 1:30 Central Standard Time. That's 11:30 a.m. on the West Coast. So thank you guys for tuning in. Share this show, no matter what platform you're listening to it on. It's on Stitcher, iTunes, Google Play, Spreaker.com, as well as the own app. So go get the app. Go get the 800 Credit Score Man Show app, and all of the shows will be available for you. Recently, there was an update, and I believe even if you don't have Wi-Fi at the time, you can still listen to the shows on the app. So go ahead and get the app for the 800 Credit Score Man Show and never, ever miss a show. There's no excuse at all. So again, thank you guys for coming in and listening to the 800 Credit Score Man Show. Today, we're going to talk about financing. How does this whole financing thing works? So remember, we talked about making this mission and taking it to a movement. So we're going to be doing that today on the 800 Credit Score Man Show. So of course, we're going to talk a little bit about credit, but I'm also going to give you this financing piece so you know how it actually works when you go somewhere and try to finance something. So we're going to talk about that today. And today's show is brought to you by none other than State Farm agent Paul Downing. So remember those good old days of dual income, no kids, double-digit pay raises, and 2-for-1 stock splits? Well, these days, money's a lot harder to get a hold of and even harder to hang on to. That's why State Farm agent Paul Downing would like to introduce you to the Discount Double Check. He'll go through your car insurance policy line by line to make sure you're getting the discounts you deserve and aren't leaving any money on the table. It's fast, it's free, and when he's done finding you 10% here and 15% there, you could find yourself looking at discounts of up to 40%. That can mean savings worth hundreds of dollars, and that's a pretty good return for simply investing a few minutes of your time. So call State Farm agent Paul Downing today at 219-884-6947, because being there to help keep more of your money in your pocket is why he's here. Like a good neighbor, State Farm is there. You guys get at Paul Downing. That's 219-884-6947. All right, so you know how the show works. I got to jump into our topic, right? But I got to give some shout outs. And what I've been doing lately is I'm starting my shout outs with the younger people that may be listening to the show. So I want to start out the show today with the first shout out. It's really two. So it's Landon and London Banks. They turned 6 years old earlier this week. So happy birthday to you. These two twins, one boy, one girl, are a joy to be around. So happy birthday to you guys. And I've got to say this right away as well. I attended the nuptials last night, actually in the wedding last night, of Sherrod and Marie Denson. So best wishes and congratulations to you guys. May the best days of your past be the worst days of your future. So congratulations and best wishes to you guys. So let's jump into what we're going to talk about today. We're going to talk about the financing piece today, talking about the fine print. So when you see those ads for financing, whether it's, let's say you're going to go to a furniture store. You're going to go to XYZ furniture store, and you see when you pull up, they got the marquee out there, and the marquee says, you can get all the furniture you want for 18 months, same as cash, or 18 months, no interest. It says something like that. So how does that really work for you if you can be approved for it? Now, first of all, since we do talk about credit, this is a show about credit. First of all, your credit's got to be okay. It doesn't have to be stellar necessarily when you go into these kinds of stores and you want to get this type of financing. It doesn't necessarily have to be stellar. You do need to have a decent credit score, though. I have worked in the past with companies just like this, and oftentimes they do not require that you have the highest credit scores. They require like a minimum, if you will. They're kind of a high-risk kind of place, so a lot of people can actually get approved there. So what happens when you go in? So let's just say you have a place you go into, XYZ Furniture Store, and they're offering 18 months SAC. That's same as cash. So what does that mean to you? What it means to you is for 18 months, you get to take this furniture home. You take it home right away or whenever they can deliver it. You do that, and then over the next 18 months, it's almost like cash. So you will have a minimum payment often. Oftentimes, you'll have a minimum payment. So you'll make your minimum payment on a monthly basis. But in 18 months, you're going to have no interest charges. Sometimes you may even have the option not to make any payments at all over the 18 months. But then at the end of that particular term, so at the end of that 18 months, if you have one of the deals, let's just deal with that deal. Let's say you have 18 months and you don't have any payments at all. For 18 months, furniture sitting there in your house, you're living it up, no problem at all. Now you have the option to go ahead and make payments. Of course you do. But if you have the option and it says no payments at all, what'll happen is at the end of the 18 months, then you will start getting your bill that'll say, hey, here's how much you owe. Here's how much you owe every month. And so it'll be a monthly bill for you. Now, what you don't get is the advantage or the benefit of not paying interest at that point, because you had 18 months not to do anything at all if you didn't want to. And so now you're going to have to make interest and make payments on the particular account. And it's usually set up over a term for the most part. So sometimes it's just open-ended, kind of like a credit card. It's just open-ended and you just pay and pay and pay until it's done. Other times it may be set up on a term where, you got the 18 months free, basically, and then you get another, 18 months to go ahead and make the payments, and they'll just divvy them out. They'll take your $2,000 that you spent in there, and they'll divide it by 18, and that'll be your monthly payment. So oftentimes, that's what happens. Let's deal with the one where a lot of people get in trouble, or a lot of people aren't aware of what really happens. So when you have the 18 months and it's no interest, what happens when you do that? So what usually happens is you go into the furniture store, again, XYZ Furniture Store. You go ahead, you fill out your application. You've been listening to the 800 Credit Score Man show, so your score has risen. It's risen, right? So you don't have a problem getting approved at all. You get approved for your account. You got $2,000 worth of furniture that you bought. Now, within these 18 months, you got 18 months same as cash or 18 months no interest. Within this time frame, you have a minimum payment. So they'll give you a minimum payment. Let's say you went ahead and for simplicity's sake, you spent $1,800 and you got 18 months. So for simplicity's sake, that's $100 a month that you would typically have to pay for it to be done, and you don't have to pay any interest at the end of the 18 months. So let's do that. Okay, so since you have that particular thing going on for you, you will get a bill every month. Now, your bill may say XYZ Furniture Store, but XYZ Furniture Store sells furniture. They don't finance anything. They're not a finance company. That's not what they do. So what happens is XYZ Furniture Store, what they do is they contract with another financing company, a personal finance company. It could be somebody like right now there's a place called One Main or Springleaf. There used to be Citigroup and Household and American General. Some of these names may be familiar to you. So typically, let's say American General went ahead and they were the people that finance for XYZ Furniture Store. So you'll get your bill in the mail. You may even get a credit card that says XYZ Furniture Store on it. But the other company was the company that's actually handling that account for you. So let's get back to what happens. You'll get a bill in the mail. Your bill may give you a minimum payment. Now your minimum payment is probably not $100. Your minimum payment is probably somewhere it's probably somewhere around $50. So if your minimum payment is $50 and you only pay the minimum for the next 18 months, at the end of the 18 months, you've only paid like $900. You still have $900 to go. So you're thinking in your head, and most people do because it actually makes common sense, but financial things do not always make common sense, and they're not always in the consumer's best interest. In your head, you're thinking, I have $900 left to pay on this particular bill, which means now my interest-free portion is done. I'll pay interest on this $900 beginning, now, beginning at the end of this 1,800 months. That makes sense. Makes sense to me. I'm sure it makes sense to you. But unfortunately, that's not actually how it works. So what happens is this. You now have a balance of $900 left after your 18 months of no interest. You've got $900 left to pay on this particular loan. If you don't make that final payment to clear it all $1,800 by the end of your date, whatever date is, when it comes to maturity, you are charged interest from the very beginning. So if you bought your furniture July the 1st, you are charged from July the 1st all the way back, and if it's 18 months, a year and a half ago. You're charged interest from way back then. That's a lot of interest, more than you think, because you think you only got $900 to be charged on. That's not the case. You're going to get charged from day one, and you're not going to get charged only on the balance that's left. In this case, in our example, $900, you're going to be charged the interest on $1,800. You have 18 months to pay this off with no interest at all. That's the way it works. Now, if you don't go ahead and pay it, you're going to get charged interest from day one, again, from day one over the entire amount. So that $1,800 from day one. So if it's July the 1st of last year, then that's what's going to happen. You're going to get interest from all of that. Now, unfortunately, that's the way that it works. And you'll get charged that interest. You won't get that benefit that you thought you were going to get and get to save that money. That won't happen for you. Now, what's very important for you to do is to know that date. When that statement comes, oftentimes you'll miss it because it's in the fine print. It's in the fine print of how this whole thing works, and it may be in the fine print of when your actual maturity date is. Now, fortunately, with the Consumer Financial Protection Bureau, they've made some changes, some things now that when you get that statement, it may be actually in bold. It's going to be bigger, so you know when that maturity date is. You need to put that maturity date in your calendar. Not only do you need to do that, you need to make payments that are commensurate, that will make you pay it off within that time frame. So for simplicity's sake, what do? We said $1,800 over 18 months. Simply, it's $100 a month for you to pay and have that done and not have an issue. This way you get to avoid those finance charges. So you want to make sure that you take that 18 months and you take that $1,800 and you divide it out $100 a month. That's what you want to do to make sure that you don't pay that interest when it comes down to, this kind of financing. Make sure that that's the way that you do it. Now, here's also what happens when you go to a finance place like this. So you went to XYZ Furniture Store, and all of a sudden, now you're getting solicitations from another company. Sometimes you don't even know who this company is, but you get solicitations from them now, because now basically you're a customer of the company that finance. So I talked about American General and Household Finance. So let's say it's American General again. You get solicitation from them. Oftentimes they're offering you, because they've already looked at your credit. They know what your credit score is. They know what your finances are, how much money you make. They know if you're making particularly this bill and that payment on time. So oftentimes they'll send you letters, pre-approval letters. They'll offer you, $2,500, things like that. They'll send you an actual check in the mail and say, sign this check or come into our office and sign this check and we'll give you the money that's stated in this check. That's a personal loan. So some of you aren't aware of that. That is a personal loan, and that's pretty much how a lot of people actually get their personal loans. We became a customer by going through XYZ Furniture Store, and now you're a customer of one of those companies.